Hi, I'm Keith Barrett, founder and president of Vesta Settlements, and in this video we're going to discuss the new mortgage disclosure rules as implemented by the CFPB. So just a couple quick disclaimers. Obviously in a 4 to 5 minute video it's very difficult to cover all the detail that's going to be needed. So the purpose of this video really is to whet your appetite, is to kind of introduce you to some of the high points of the new rule. And so just by way of background, and a very simplified background, this was all the result of the Dodd-Frank Act. And the Dodd-Frank Act created and directed the Consumer Financial Protection Bureau, the CFPB, to issue new rules to integrate mortgage disclosures. So in the past, and frankly what we have currently at the time of this video, is we have an initial good faith estimate, an initial truth in lending statement, and a HUD-1 settlement statement. And these disclosures are issued under different regulations. Truth in lending is controlled by Regulation Z, and the HUD-1 is controlled by Regulation X. So what we have the CFPB doing now is integrating these disclosures. And so the effective date is going to be August 1 of 2015. And as of that date, we are going to have an integrated disclosure environment. Specifically, the good faith estimate and the initial truth in lending statement are going to be integrated into a form called the loan estimate. And at the end of the transaction, we have the final truth in lending statement and the HUD-1 settlement statement that are going to be integrated into a document called the closing disclosure. And I'm going to just kind of briefly take you through these documents in this video to try to get you acclimated and talk about, some of the procedures and timing. So let's start with the loan estimate. The loan estimate is going to be a 3-page document, and the loan estimate will be required to be provided to a consumer once they make application for a mortgage loan. And application is specifically defined. There are 6 pieces of information that create an application. Once that information is provided and an application is made, that triggers a requirement on the part of the creditor to deliver that loan estimate within 3 business days to the consumer. And so there's some similarities to what we currently have in that environment. And remember, this trigger begins August 1 of 2015, and that's going to be a hard deadline. So any loans that are in progress prior to that point in time will be done kind of under the current regime. Any applications made from August 1 forward will trigger these new requirements. Now, once that loan estimate is made, that kind of creates some boundaries, if you will. Now, you should all be familiar currently with what we call tolerances. So they kind of bucket different fees, and those fees have different tolerance levels. A 0 tolerance, a 10% in the aggregate, or the fees can change by any amount at closing. They're kind of keeping that structure in the new loan estimate. They actually refer to them now as variances, so they're just trying to keep you on your toes by changing the terminology. But it works kind of similar. They've also kind of rejiggered some of the buckets. For example, lenders have to provide a written list of service providers, and if a consumer picks a service provider off of that list, it will go in one bucket, and if they don't pick a service provider off of that list, it will go in another bucket. So these things can kind of be very fact-specific depending on what is chosen. The rule also says, or certainly doesn't prohibit, a lender from providing a loan worksheet. And a lot of lenders kind of asked about that. So lenders can certainly provide a worksheet before receiving a formal application. But the rule is clear that lenders have to take precautions to not confuse consumers into thinking that that is somehow the loan estimate. In fact, the rule requires very specific language to be put on that document to simply make sure that consumers are clear that it is not the formal loan estimate as required by the rule. But I know a lot of lenders wonder about that, so that will still be the case, that they can provide worksheets to consumers. Other than that, the specifics of the document itself, If anyone is interested in looking at those, they're on the CFPB website at cfpb.gov, and we just simply don't have time in this video to kind of work through every part of that form. There are some ability to change the form, to redisclose later on, and these are called changed circumstances. This is also similar to what we have now. But to be clear, a miscalculation, an error, things like that, that is not a reason or an excuse to later revise that form. A changed circumstance would be something like the consumer wanting to, pay an additional half point to reduce their interest rate. Then, of course, a redisclosed loan estimate can be provided to the consumer. So that's kind of the front end. Last thing on the front end, we talk about these business days. It has to be provided within 3 business days. That's also defined by the rule. A business day for the loan estimate is defined as any day on which the lender is open to the public for substantially all of their business operations. So you'll notice that's a little kind of trickier than what you would normally see defined as a business day, and frankly, that can be a bit of a moving target. I would imagine that some lenders may be open on a Saturday in terms of substantially all of their operations, and others may not. And so for one lender it might be a business day, for another it may not. But that's how the rule defines what a business day is. Then we kind of move toward the back end, or the latter part of settlement, and we have this theme, this 3 business day theme, and I've already told you that now we have a closing disclosure as of August 1 rather than a HUD 1, and that closing disclosure needs to be provided to the consumer 3 business days prior to consummation. Now they don't use the word settlement or closing, they use this word consummation. And consummation under the rule is when a borrower, a consumer, becomes obligated on the loan. And they've said that that's really controlled by state law. Now I'd imagine that for the vast majority of cases, that's going to be when the borrower signs the loan documents, particularly the note. That's when they become obligated. That's kind of the contract on the loan. So since that often occurs at settlement, at closing, I think for purposes of this video, we can make that synonymous. So 3 business days prior to closing, even though the rule says consummation. Now, here's, I think, one of the biggest new parts of the rule. The rule says that the lender is responsible for delivering that closing disclosure to the consumer within that time frame. Now, the rule also says that the lender can have a settlement agent do it. But as of the time of this video, I will tell you that there are a number of large lenders that have already publicly communicated that they intend to control the delivery of the closing disclosure. For example, Wells Fargo and Bank of America have already said they will be providing that disclosure. So this is going to kind of reverse engineer what has been a couple decades worth of process in terms of settlement agents being the ones to deliver the HUD 1. And so there's a lot of back office work going on there. And as of August 1, we're going to see kind of a change, at least with those particular lenders, and I'd imagine others will follow suit. But again, this can be a moving target. It's up to the lender. So in some cases, a settlement agency might be delivering the closing disclosure, and in other cases, the lender might be delivering it. Either way, the rule requires that the borrower, get that disclosure 3 business days prior to closing. Now, what are the rules surrounding that? Redisclosure, etc. There are a couple different variations here. If that closing disclosure needs to be redisclosed, in some cases there needs to be a new 3-day waiting requirement. And the cases that involve that would be the addition of a prepayment penalty on the loan, if the loan product changes, or the APR becomes inaccurate. These would require a redisclosure of that closing disclosure and a delay of the settlement for another 3 days. Most other changes will require a redisclosure, but not a new 3-day waiting period. So there's been some concern, for example, with like walkthrough issues that come up. Well, luckily, usually those things are not going to change, adding a prepayment penalty or the loan product. And so we would simply need to redisclose, and then at that point we wouldn't have to wait another 3 days. The new closing disclosure is now a 5-page document. So keep in mind it's longer because we are integrating what was the HUD-1 and the final truth in lending statement into one document. Some parts of the document look a little bit different than what we're used to. Some parts are kind of similar. Again, some variations in there. I would encourage you as well to take a look, go to the CFPB website. They have examples of those documents. And of course, we will be teaching numerous classes where we will get into the kind of detail on both the loan estimate and the closing disclosure. So we definitely have a new regime beginning on August 1st. And I want to reiterate that the purpose of this video is to, number one, make you aware of it. Some people might not even be aware of what's going on. And number two, to start giving you kind of the general flavor of what it's going to be looking like, what the requirements are, and how the process might change a little bit as of August 1. Of course, at this point, it would be all prediction-based, but I would say that as of August 1, just from a practical tip point of view, you definitely want to be doing things earlier in the process. And that's not a bad thing. I think a lot of times people want that HUD-1 prior to closing, and frankly, as far in advance as closing as possible. Well, now the new rule is going to require that, but the consequence is that everyone involved in the transaction will be required to do things on a more timely basis, because the only way to provide a final HUD-1 3 days prior to closing is to have all the information that's going to be needed to complete a closing disclosure. So definitely get in the habit of sending in invoices early, doing things earlier in the process. The entire loan process might have to be extended a little bit because of the time frames, the 3 business days up front, 3 business days before, and delivery to the consumer. So we're going to all need a little bit of flexibility here, but again, this is an introductory video on the new loan estimate and closing disclosure and all of kind of the procedures that will be involved in the new CFPB rule, which, by the way, is about 1,888 pages long. So I apologize if this was a little bit general, but just not possible to cover all of that in a video like this. If you'd like more information on the new Truth in Lending RESPA integrated disclosures, as it has become known, please visit our website at vestasettlements.com, where you will find some additional information, and also look out for upcoming classes that we'll be having. Thank you.